Going back to 2008, that's kind of when my eyes were open to a lot of the craziness that goes on in the world and just how deceptive, central planners and people at the top are. So I've been expecting this for a while, but you know what? With that also comes, you have to guard against complacency. Like, is it actually happening now? Because we've been expecting this for so long. And, I believe that the time has come where a lot of, these poor policies that have been going on for over a decade now, or even longer, really, are coming to a head. And I think 2022 is going to be a wild year for sure. And I'm very intentional with that word deception, because some people debate, is the Fed stupid, or are they doing this intentionally? And I certainly don't think they're stupid. I think it's very intentional what they're doing. And there's we're being deceived in what we're told, but by almost everything on the mainstream media, from my perspective, is outright just flat out not true. But one of the things we focus on is currency and finance, because if you can get ahead financially, that kind of opens up other options for you to kind of exit the system. And deception is it centers around the monetary system. If people could understand, we're taught in school, that money is borrowed into existence by a private entity, otherwise known as the Federal Reserve, which is no more federal than Federal Express, and then that debt is owed back by the populace at interest. There would be a revolt in the street tomorrow, but people don't know this. And, it's unfortunate, but people are starting to wake up. It's the wealth gap. The wealth gap right now is the widest it's been in decades. And there's a quote out there, I can't remember it correctly, but the biggest reason for civil unrest going back millennia is when there's a wealth gap between the rich and the poor. And Fed monetary policy is the direct cause of what's happening right now as far as the wealth effect. And people don't understand it, so they blame each other. We've got class warfare going on instead of going to the source. And when the Fed creates currency out of thin air, it benefits the wealthiest people at the top. And inflation benefits the people at the top. So if you're the first to receive that currency, you can spend it, you can invest it on things that are going to benefit from inflation. Where if you're spending 99% of your disposable income on groceries and necessities of life, just a little bit of rise of inflation crushes you, and it doesn't benefit you at all. I think one thing we can do is, it happens between our ears, and that's removing ourselves from, I call it the false left-right paradigm. Just remove yourself from that. I'm not pitted against my fellow citizens. If I'm going to be angry at anything, it's the people who put these policies in place. But even directing anger at them, I don't think we have no ability really to change it. So if you can understand the system, use it to your benefit, and that way you can put yourself in a position to not only survive but prosper in this environment and be a blessing to other people as well. I'm not sure if I've heard of Cantillon effect. I can't recall if that's exactly it, but it sounds accurate to me. But yeah, you're right. And it's not only those people who can benefit from it. Understanding how it works, you can use this to your advantage if you've got a little bit of disposable income, and you can position your investments accordingly. And I gave the example of quantitative easing, but sometimes like direct bailouts, that first $1,200 stimulus check that most people got in 2020. Well, if you ran the numbers, I can't remember exactly, but I think that cost the average person, like the average taxpayer, if you divide up the bill divided by the total number of adults in the United States, it cost you like $50,000, and you get $1,200. And most people say, "Oh, thank you." Well, now you're in debt $50,000 more that your tax dollars are going to have to go to pay. Well, that raises the question: where did the other $50,000 go to? It went to corporations. It went to special interests, just handed directly to them. And we're conditioned to say, "Oh, wow, thank you for the $1,200," when it's not a benefit for you in the long run. Here in commodities versus general equities going back decades, what you're going to find is that commodities have not been so cheap relative to paper assets in almost 100 years, around 100 years. So commodities are dirt cheap. And in this kind of inflationary environment, commodities tend to prosper and thrive. And I'm looking for that trend to reverse. I think it already has started to, but I think there's a lot of runway ahead for commodities to outperform just traditional stocks, general equities. So that begs the question: if commodities are cheap and we have a long runway ahead, well, what are the best commodities to invest in? Because I don't want to just invest in all of them. And to me, silver, uranium, gold, copper, and platinum offer the most favorable risk-reward setup over the next 1 to 5 years. And notice I mentioned in there platinum. Not many people talk about platinum. Some do, but platinum is ridiculously undervalued. If you compare platinum to even other metals like silver and gold, It's just wildly undervalued, and there's some reasons for that. But I think platinum, is really exciting over the next few years. I'll put it that way. I view platinum as very speculative. So, it makes up a relatively small percentage of my overall portfolio. I think silver, gold, copper, uranium, those make up the lion's share. However, platinum, it reminds me a lot of uranium back, a handful of years ago when everyone hated uranium. The world was swearing off nuclear. So it's similar. It's not exactly the same. But in 2015, your listeners may remember the Dieselgate scandal, where these catalytic converters they had problems with their emissions. So the world's like, hey, we're going to go away from diesel, and that took a hit to platinum's demand because it's used in catalytic converters, mostly in diesel engines. Well, I think that negative fundamental factor has been more than priced in now, because platinum right now it's trading at like half the price of gold almost. Traditionally, it's more expensive than gold. Same with palladium, cheaper than palladium. This is a rare anomaly. And all of the future catalysts are being completely discounted, in my opinion. One of the big catalysts is hydrogen energy or hydrogen fuel cells in vehicles. Big corporations are putting a lot of money into hydrogen technology, as are governments, and it doesn't get much press yet. Well, that technology requires a tremendous amount of platinum. So I think that's being discounted. And then also, since platinum is so cheap relative to palladium, palladium is also used in catalytic converters in internal combustion engines. And a lot of these vehicle makers are starting to switch and say, we're going to substitute platinum for palladium because it's cheaper. And we see early signs that that's happening right now. And I think that's a trend that's going to continue for a long time as well. And then one final thing, not to give too long of an answer, but the platinum market is small. It is tiny. Platinum is roughly 30 times more rare than gold. So if just a small percentage of the investing public says, hey, I want a couple ounces of platinum, well, that can dramatically alter the supply-demand fundamentals in short order. So those are just some of the reasons why I'm really excited about platinum. Everything ebbs and flows, so I can see the pace of change, or the rate of that inflation is accelerating, slow down. But that's not deflationary. They call that disinflation, where inflation continues to increase. It just, the pace decreases. And I think that may happen for a period of time, but at some point, the inflation we're seeing now, I think, is going to look like nothing compared to what's coming. Because from a very big picture, zoom out past this build back better, the federal government has no choice, or the Federal Reserve, I should say, has no choice but to monetize massive amounts of federal debt. I think it was in 2020, or was it 2021, where the Fed monetized 55% of all the treasury issuance. So if they step back and say, we're not going to buy this, who's going to buy it? Who's going to fund our government? Who's going to lend money to the United States, which is technically insolvent on a mark-to-market basis? And to incentivize anyone to lend to the government, interest rates would have to rise substantially. And that alone would crush the economy. So they have no choice but to continue to monetize debt, because who else is going to lend it to? Despite any short-term deflationary impulse that may happen over the next couple months.